Welcome to Shadow of Truth, and today is Friday, August the 4th, 2017. Before we get into the show, I wanted to just take a moment to address YouTube and the censorship. And as a lot of you know, are well aware that YouTube has been censoring. The censorship is going to get a lot worse, and we need your help. Dave and I both operate websites. Dave's at investmentresearchdynamics.com, and you can find my work at thedailycoin.org. Your traffic is vital to our websites. We don't have a Patreon account. We're not going to open up a Patreon account. We're not asking anybody for any money. We're not asking for that at all. YouTube could delete the Shadow of Truth channel at any moment. They could delete the Daily Coins YouTube channel at any moment. And there's nothing that we can do about that. So what we need is your traffic at our websites. I know it's hard for you guys. I know you like YouTube, like that format, but we really need your support at our websites. And once again, not asking for any money, not asking for any of that, just the traffic. Just please consider visiting our websites, reading what we write, supporting what we're doing at our websites. It would mean a lot to us. Thank you very much for your time and consideration. Dave, what have you got in the hopper? What you working on that's going to be released this weekend or today, or what's on your plate?
Well, I'm just looking at these job numbers, this employment report, and I used to get excited about sitting in front of the screens and waiting for the headline to be released and then trying to react in the market. But I mean, these markets are so artificial anymore, and the number is so artificial that I didn't really even start looking at them until about an hour after they were released. It's the same thing on FOMC day. I maybe about an hour after the initial insanity has died down, I'll go and actually look at everything. But once again, the employment report is completely rigged, completely unrealistic. They drove down the unemployment rate by reducing the size of the labor force. Allegedly, they removed another 156,000 working age population bodies from what they considered to be the labor force. They're saying that the participation rate ticked up, but I mean, it's still, you got almost 38% of the working age population that's not considered part of the labor force, and there's a lot of reasons for that. I'll probably do a blog post and go into that on my website at some point this weekend. But the other number I wanted to just point out really quickly is they've got this birth death model that they do, and it's based on supposed businesses that were created during June minus supposed businesses that went out of business in June. And we know that new business creation is at a 40-year low in this country, and yet they still are attributing. Now, this is a seasonally unadjusted number, so I don't know. This is what they say was the unadjusted number. They said it added 158,000 to the labor force or the 158,000 jobs in June. So they're saying that a lot more businesses were created in June than died in June, and that's just totally absurd. I mean, we know that just with retail businesses closing down alone, that we probably had a net loss of businesses, small businesses in this country. But this is where it really gets funny. They're giving credit for the construction industry adding 11,000 jobs to the birth death model in June. And the reason why that's funny is that the construction report that's released by a different government agency earlier this week showed that construction spending is down 10% year over year for the month of June. So there's no way that net new businesses were added that added 11,000 construction workers. So it's just, once again, ignore this number. What gets kind of frustrating, but I've kind of learned to ignore it, is that you saw the stock market spike up, or at least the S&P and Dow futures spike up on the report because, hey, more jobs were created than expected, and gold got slammed because, hey, oh no, they're going to have to keep raising interest rates here, and that's bad for gold. Well, guess what? Raising interest rates is bad for business creation, and it's bad for employment. So it just shows you how manipulated these markets are and how artificial they are. So,
Yeah,
the good news is there's dozens and dozens, hundreds of stocks that are at 52-week lows or even below 52-week lows. And so it's still very possible to make a lot of money shorting this market.
Yeah. Short Sellers Journal, produced by
Exactly.
Dave Kranzler.
What's on your mind today, buddy?
Well, I want to make a quick comment. The birth-death model it's a mirror image of the Federal Reserve note. It's created out of thin air, comes from nothing, means nothing. It's just something that they make up as they go along. And then at the end of the year, they'll correct all the, quote, seasonal adjustments, and then the number will plummet. And it'll be, instead of 156,000 jobs, it'll be like 12 jobs. Not 12,000, 12 total, and it's a joke is what it is. But what I've been working on, you and I both wrote about this, the Sydney, Australia market, the opening, Zero Hedge reported on it. Craig Hemke over at TF Metals Report tweeted about it, tweeted to Zero Hedge a couple of days ago. And at the Sydney opening of the gold and silver markets, 2 nights in a row, there was a spike straight down. And on the first night, it's on silver, it spiked straight back up. And I theorized that it was either, some rookie that hadn't been shown all the buttons to push, or the criminal cartel was testing out a new software and they hadn't gotten all the bugs worked out. So, and all of a sudden they're introducing the Sydney market as a new forum to manipulate the market during the thinnest hours of the day. And it's just, whatever it is, it's ridiculous. I mean, to see, I think you reported something like 10,000 contracts had been dropped in 25 minutes. I mean, which is,
yes,
10,000 contracts at 7 o'clock Eastern time on any day is not realistic. Or am I right? Or is there some big to do in Australia all of a sudden that somebody needs to sell 10,000 contracts of gold at 7 o'clock Eastern time?
No. Maybe when the COMEX floor is open in the middle of the day, in the middle of the week, you might get 10,000 contracts trading every half hour or whatever, and maybe even a little more than that, quite a bit more. But those contracts were shoved through the Globex computer system, and Australia had literally just opened up, and it's a very, very illiquid period of the day for gold contract trading in the Globex system. So for them to unload that much paper into the system, and most of the contracts were sold in the first 5 minutes. And that's just the August contract. That's not all the contracts. If I had gone through and took the time to add them all up, you're probably looking at more like, closer to 20,000 contracts were unloaded. So, and that's just, a lot of that is just pile-on selling by the hedge funds who have their stop losses triggered, and that's what they're trying to do.
Right.
They're trying to figure out where the stop losses are, and that's why you see such a big hit in gold today, because there's some obvious levels where stop losses were set. I mean, if you look at if you look at a chart, you can kind of see, oh yeah, if I was a hedge fund, I'm going to set a stop loss just above the 50-day moving average because I want to be the first one to sell if the stuff starts to head lower. Right. And then it triggers all of them, and then you get a fishing line drop like you get today, like we saw today, or when Sydney opened up the other night.
Yeah, and what's happening right now is looks like around 8:30, around the time that the London or the COMEX, the pit opened, straight line down, kind of gold kind of moved lower, and now another big spike down just around at the top of the hour. So around
right, and that's a lot of that's a function of these guys bombing the market to trigger where the stop losses are set.
Well, they've got it below. They've not reached 1250 yet. They're right around 1255 right now for gold, and silver's around 16 and a quarter. Yeah, so 1255 for gold and 1624 to be exact on silver. So they're just beating, and that's like you were saying, the artificial market.
Also, I'm sorry to interrupt here real quickly, but before I lose my train of thought here, it depends on what contract you're looking at. I think you're looking at the August, something that's giving you the August contract, because now what you want to look at is the December contract. That's the front month and the most active, and that's okay. Down to 1262, and it's a couple bucks off the bottom. So just to clarify.
All right. Well, it's whatever it is, it's ugly.
If it really, I mean, it's unnecessary.
It's unnecessary.
Yeah.
I mean,
it might be necessary for them.
Well, that's how they generate billions of dollars of profit. But exactly. I mean, so where's the $6,000 gold that the president of the CME group, Terry Duffy, was talking about? Why is it moving in the opposite direction? Why isn't it moving up? It's ridiculous. I mean, that proves, I mean, this is the president of the company that writes the regulations, that owns the market where gold and silver are traded. He's the president of the company that owns that market. And he's saying $6,000 gold is what should be happening right now. And if it's $6,000 gold, that means that silver should be multiple times higher of where it is currently. So if they're saying that gold, if the president is saying that gold should be 4 times what it is currently valued at on the market, so-called market, and if you multiplied 4 times by silver, you're looking at, $70 silver. So where's that at? Where are these numbers at? In the ether, that's where they're at.
Yep, that's just the reality that we're dealing with. So
it's unfortunate. Well, past couple of days I've been down in New Orleans, and I met up with our buddy Jeff Brown that you and I have spoken with for the past couple of years over in China, and I got to meet him face to face, and it's a very interesting interview that he and I conducted. It's really good, and I'm going to release that later today also. So that's another thing that's on my agenda.
Well, that sounds good. I mean, I'm kind of tapped out right now. I'm still in the summer doldrums.
Well, you're going to have to get over that, Dave.
I'm going to have to let you close it out today, Rory. I'm ready for the weekend.
Well, let's get out of here and go enjoy our weekend.
I'll catch you next time.
All right, buddy. Have a good one.